Welcome to another episode of Growing Pains, where we help entrepreneurs and founders who are considering funding get prepared for what that funding brings. And I'm here today with David Rowley, an operating partner with Diversis Capital. They have about 1.7 billion AUM and are currently investing out of a $680 million discretionary fund, institutional fund. What I love about Diversis is their focus on software and technology companies, especially in the enterprise and B2B space. And the quality of their value creation team with operating partners like David. It's also the size of their operating partner team. It's rare that you have such quality and size in a mid-market private equity firm. And so Diversis is definitely a great company to deal with. David, as leader in the technology side of the operating partners, is responsible for both due diligence and post-acquisition transitions. David is here to tell us everything we should know about how to prepare ourselves for growth equity or an exit with a private equity company with the sophistication of Diversis Capital. David, welcome to the podcast. So I guess the first question is, can you describe a bit about your specific thesis in this?
Sure. So when a PE firm is considering acquiring a company, a platform, so primary acquisition, the thesis isn't firm at that point. So we might have an idea about the potential that the company might have given sort of the market conditions, how the market's growing relative to competition. Is the total addressable market sufficiently large, growing? And do we feel like the company that has the potential to sort of expand there? So, but at the beginning, we're not exactly sure how or whether that might be the case. So during the diligence process, we're exploring a lot of different things. We're looking at sort of the overall, the TAM, so we understand sort of where the company plays and what the potential is. But we also care about market dynamics. We care about the competitive dynamics. We obviously care about the performance of the company up until that point. And so there are a lot of factors. Now, technology plays a big role. Generally, as you mentioned, Diversis is looking at software companies, so technology is kind of core to that. And in some cases, we're looking to acquire companies that have been built up over many years, and so there could be a lot of legacy technology. So that has to factor into our thesis. If we're investing in a growth thesis, let's say, like we believe that the company has an opportunity to grow and expand and take up more of that pie or take on an adjacent pie, then is the technology going to be an asset or is it going to be a liability? And so even without sort of making judgments about, is it purely good technology or purely bad technology, it's never that simple. It's just how would the technology sort of support that thesis if there is a growth thesis?
Okay.
Other PE firms have sort of a different approach, and they're primarily looking at how they can optimize the operation of the business because they might believe that there's sort of inefficiencies built into the way that the company is operated. And so you're looking for ways to achieve those sorts of economies. And in that case, the technology can play a role there. Does the technology inherently incur a certain operational burden that you might have to address? And you might have to address that by replatforming or dealing with tech debt or something like that, or simply changing the way the company goes about doing the business of building and delivering their product to their customers.
So that is not your MO to go fix broken technology companies.
There's always an aspect of that, right? So firms are looking for good deals and opportunities to create value over a relatively short period of time. And so if a company is like killing it and just like a really high achiever, and there's not really a lot that we think we could do in that period of time, then even though it might be a great company, it might not be a good deal for us, right? It's not a good opportunity to create significant value. So even though we might be investing in a growth thesis, typically there's work to be done on the technology to achieve.
Okay. And then, so that sounds like the thesis follows the opportunity to acquire a company as opposed to a thesis and trying to fit companies into that thesis.
Yeah, there will be a general thesis based on, what we perceive as the company potential. But I can tell you that during the diligence process, it's a participatory exercise, right? So it's not just led by by the deal team or sort of on the investment side, operators and advisors and consultants who know something about the space are contributing to that. And so we're formulating the thesis and we're building a model that represents the kind of investment, the kinds of changes that we think would need to happen to achieve a particular outcome. Now we have
Right.
sort of general ideas about what would look good at the end that we would want to achieve. And so the thesis is really like, so how are you going to get there?
Right.
And what's it going to take to get there? So those aspects of it just become clarified. And we have to get to a level of clarity and conviction before we make the decision to invest.
Right. And some companies actually have work with the team that they're looking at acquiring and actually walk through what their plan is for that company as part of the pre-acquisition phase. Is that your process as well?
So there's certainly, we're asking them to open the kimono, right? So
Yeah.
But but at the same time, you want to avoid introducing bias into the conversation at that point,
Right. Right.
and you want to sort of get to the truth so that you can decide, make decisions about what it would take to achieve the outcome you're after. So we don't want to telegraph an answer that and then sort of
Right.
hear that back. So there's certain level of sort of trying to avoid introducing that kind of bias. We try to be forthcoming about what the opportunity looks like because we want to understand, especially as we're talking to the leadership team or members of the leadership team during that diligence process, what role they might play in helping us achieve it.
Right. Okay. And you talked, and I want to go back to the market size and the TAM
Mhm.
because it doesn't seem like a clamp on strategy for you guys in rolling into a market. It seems like you're picking verticals, SaaS verticals, and sticking and letting that company grow within that as opposed to amalgamating a whole bunch of companies. Is that a fair statement?
Yeah, that's generally true of Diversis. Obviously, that's not true of a lot of other PE firms.
Sure.
One thing I've learned sort of working on the PE side and talking to other folks in other PE firms is like no two PE firms are exactly alike, right? And they may
Yeah.
have very significant differences in their approach. And so some might approach it by looking to do roll-ups of different assets that are brought together.
Hmm.
Typically, we're looking for a solid platform, and certainly M&A and adding on could be part of that thesis and how we achieve what we want. Uh,
Right.
Rarely the case that we go into a transaction pulling together multiple parties. That can happen. It's just not hasn't been our experience primarily, and where other PEs may do that exclusively.
Right. Yeah. Yeah. So that's the federation of, and sometimes it's a federation of companies, and sometimes they're looking for synergies across those portfolio companies that they
Yeah,
can bring in
yeah,
best of breed and
yeah.
reduce operating costs.
We like to have sort of a solid foundation. So even though a company that we acquire might not be able to get us where we need to go by themselves, just by sort of
Hmm.
investing organically into the
Hmm.
company, we typically don't sort of handicap a deal by saying like, well, it's only worth investing in this company if you also get this company or these other companies.
Gotcha.
So, but that's just, again, other PE firms might do that exclusively. That might be their primary approach, and we may do that in the future. So,
Yeah.
but for the most part, we're looking for a solid platform to
Right.
build.
Okay. And unlike venture, which is always looking for the moonshot to cover their portfolio of losses and other fundings, what is your approach to that company? So, I mean, I don't want to pick on any specific company, but I happen to use RoadMonk, right? And RoadMonk is interesting because it's a much simpler user experience in terms of using an Asana type of product, but it's not Asana, right? So it's not a moonshot. It's got a very specific niche for the early adopter, I guess, in that
Yeah.
space.
So, and Roadmonk was an add-on to Tempo.
Okay.
So
Okay.
was part of building out and rounding out a larger strategic portfolio management capability that Tempo represented.
Okay.
So it was not acquired to be a standalone platform. It
Okay.
was adjunct to a platform that had already been.
Interesting. Okay. Interesting. So then that begs the question, when you bring in, so you look at the company, you look at the team, you're doing
Mhm.
due diligence. You've got a great article that you posted a while ago about how you shouldn't look at the spot in time that you're acquiring. You should look at the evolution of that technology. Can you share with us some of those insights?
Sure. So oftentimes when I'm brought in to do technical diligence, I will be engaging with the principal, the technical principals at the company, and they will show me basically a snapshot of where they are right now. And that's interesting, but I'm not buying into a static asset, right? I want to understand how it got there and the decisions that were made that led to what it is, because it's never perfect, right? It's
Right.
like you're adapting to changing conditions, you're sort of applying yourself to your best ability given the resources that you have available. And so I want to know the backstory to understand what I'm looking at. And that tells me a little bit of something about like where it could go and how hard it might be to get there. But it also tells me a little something about you as a technical leader being able to tell that story and provide me that narrative. So I want to feel convinced that you have a deep enough understanding of the path that got you to the snapshot that I'm looking at today so that like you can help get it to the next thing. And sometimes it's like I feel really good about what you have to say and I totally understand the trade-offs that you made that led to what we have today and that would sort of inform maybe how we would build on that or leverage that experience. Other times it may be clear that like you weren't really involved and maybe you're not part of the picture going forward.
Going forward.
So it's both a way for me to get an understanding of this complex asset that is the technology, but also it tells me a little bit of something about the technical leadership that's involved.
It's really interesting because that story can be read different ways, right? I mean, in your agile development process, you're always tinkering and changing,
Mhm.
and that leads to the evolution of the product.
Yeah, yeah. And
So, what are you
typically
looking for
along
in
the
the
way,
storytelling
yeah,
of those iterations?
yeah. Yeah, typically along the way, it's sort of the path is punctuated by, hitting roadblocks and having
Hmm.
to architect beyond them. And so I want to understand what was the last roadblock you hit and then how you sort
Gotcha.
of dealt with it because almost certainly you're going to hit another roadblock at some point down the line and I might be very involved in that experience. And so
Yeah.
I want to understand sort of how you went about assessing your options. Did you see it coming? Do you know what to do? And frankly, it's like I want to know. Do you see the next roadblock? Like you
Mm.
should be able to
Right.
identify because it's there. It's always there, right? And you should be
Right.
able to tell me like, well, when we scale to this point, I know that I'm going to have to revisit the architecture around some component here. And
Right.
so here's what I'm looking at to tell me when I'm getting close so that I can begin that work. And it's frankly, even as scary as that potential roadblock might be, it's comforting to know that like you can see it and you have a plan for addressing it. That's actually says a lot to me about your ability to help grow.
Have you ever faced a situation where that was just selling themselves, but they really didn't? They were more like firefighters in their gut. They're not solution architects.
Yeah, so there's a couple of ways to address that. So one thing is like they don't know what they don't know, and you can
Hmm.
sort of get to that. And if you have sort of an understanding of architectural patterns and the inherent limitations with different approaches, you can kind of see whether they recognize that or not. So that tells me something. If there's sort of patterns of behavior that suggest that decisions around architectural decisions are being driven kind of singularly, and the team is generally made up of people who take the hits and just implement what they're told, that's a limitation unto itself, right? Because that means that I'm putting a lot of emphasis and pressure on the one person who sort of sees the big picture. And
Right.
and that's a lot. I would rather have a smaller, more actively, a team that's more actively involved in the solution space who's contributing to that. And so that's a tough one to assess, certainly during the very concentrated period of doing diligence, but it's certainly something that you strive to understand, if not before a transaction, very closely afterwards, because it may affect the very makeup of the team, and you might have to rebuild the team with a different kind of resource than has been there in the past.
Yeah, those are really tough calls to make, I'm sure. And
Mhm,
I guess what we've done a fair amount of due diligence on existing teams when
mhm,
we help companies refactor and stuff. And we do find those scenarios where you've got a firefighter who just love whose
mhm,
importance is the firefight. You put
mhm,
out all the fires with a new product, they're out of a job, it feels like, and they resist it. How do you deal with that transition when you're, I mean, obviously you've got a much bigger stake in the company, so you can be pretty prescriptive, but you also don't want to lose the whole engineering team. And there might be a lot of gold in the Nara Hills where the engineering team has been
Right.
doing tickets, but they really want to do more solutions engineering.
Yeah.
How do you transition there?
So there's no superficial way to do that. Like you have
Okay.
to, as quickly as possible, talk to and get to know and assess everybody down to the individual contributor. Like you have to gain a direct opinion on the strengths and weaknesses of the team, not just at
Okay.
the leadership level, but at sort of all the way out to individual contributors who are writing code.
Wow. Okay.
So that's a big investment of
Yeah.
time to do that. Time's wasted. You don't have a lot of time to waste to get there. But there's no, I
No way
don't think
around it.
there's no way around it. So there's no shortcuts to doing that. Here's something to consider though. It depends a lot on our thesis, right? So if we're going to grow or if we're, sort of underwriting significant growth and potentially changing to address an adjacent market, let's say, or sort of
Okay.
exploit a part of the market that they're already in more fully than they do now, or going up market or something like that. Getting stuck in firefighting mode, like you could just spend all of your time just sort of spinning that wheel.
Right.
And so if it's the case that I need to make some substantial changes, then that would be sort of a red flag for me. Like if they're really stuck in that firefighting mode or just sort of tactically being responsive to issues that they are now, I'll
Hmm.
probably have to introduce a different kind of leadership that is thinking more holistically about how we grow or change to exploit
Right.
a part of the market that we don't right now. So that begins to happen on your first call during diligence, right? So you're already starting to form an opinion about the capabilities and limitations of the mindset of the folks that are on board,
Right.
because in a very short period of time post transaction, you have to put in place a plan for how you're going to potentially reshape the organization to execute against the plan that makes up.
Right. So we'll go into the first 100 days in a minute, but going back to that, so if you were to look at your due diligence process, how much, I mean, technical technology is easier to fix than people, right? Um, And
Generally true, yes. I would
yeah,
say that's
I
true.
mean, it's pretty blatant fact or
Yeah,
not fact, whereas
yeah,
people issues are much more nuanced.
yeah.
And so you must become also, not just a technical due diligence guy, but also a very much a people reader.
Yeah.
And is that an acquired skill or is that something that you've always had intuitively?
Well, that's tough to say, but it's
Okay.
certainly important to be able to do it effectively. When I do technical diligence, I'm looking at a handful of areas. So obviously, I'm
Okay.
looking at the software architecture, its ability to scale, baggage that
Hmm.
it might carry, that sort of thing, limitations there. I'm also looking at the data architecture for
Hmm.
similar concerns and that sort of thing. And I'm looking at those things with what the potential thesis might be about where we need to take this thing. But I'm also
Right.
looking at sort of their software development lifecycle and how they go about the business of building software and how that works. I will look at artifacts that are part of that process to see for myself how well they are at communicating ideas and initiatives and how that turns into work that's executed by the team. I'll look at the organizational structure. In particular, I'll look at the relationship between engineering and product. That's sort of
Okay.
the most foundational relationship.
Yeah.
And I'm looking for sort of anomalies that would potentially limit their ability to execute effectively.
So what do you mean by that? Can you?
Yeah. So if they operate in a very disjointed way,
Yeah.
and there's sort of any evidence of finger pointing or us versus them or anything like
Okay.
that, that's going to get in the way of the progress that we're going to need to be that needs to be made. So I want clarity about like how requirements and initiatives come into being, how
Hmm.
they're expressed, how they're conveyed, the role that the engineering team plays in coming up with solutions.
Hmm.
Is being told just implement this
Because what the
thing.
client wants, you got to build it next month, right?
Yeah. Or like I'm going to tell you how to build this thing. So I'm
Okay.
looking for
Okay.
evidence there. I'm looking at sort
Hmm.
of what their testing approach is.
Hmm.
And I say testing approach versus like how they do QA, because QA can sometimes be just like limited to a title or a department of people, and typically testing is broader than that. So I'm
Right.
looking at sort of holistically how they think about testing. Because
Hmm.
testing is also, is this feature that we're developing delivering value, right? So I
Right.
need to test a hypothesis about value delivery. And so how do they
Ah,
go about doing that? So I'm interested in sort of the overall interaction and sort of the way that they work together to achieve a specific, outcome. The other
that's
the
cool.
other thing
Well,
I
can you,
looked at,
before
yes,
you leave that, because that's very interesting. Because
yeah.
usually you're testing technically whether it's going to take the load capacities and not break, etc.
Hmm.
You're not testing value. The value should have been pre-tested by customer success teams that talk to product or sales team that talk to product. How do you?
But if you're defining a capability that you think was going to deliver value, and maybe it's going to deliver value to sell more software or reduce
Engineering
your
value. Okay, gotcha. Yeah.
retention and that sort of thing, but or to open up a new market segment that depends on that capability. So
Gotcha.
as soon as you conceive of that, you start to think about like, well, how will I know whatever I come up with actually is effective at achieving that? Right.
Right.
So you need to sort of build into your planning process and your development process the things you're going to measure that will tell you whether you got it right or not. And
Gotcha.
so I want to see that kind of thinking early on. And sometimes you can find it, in the artifacts that get generated, right? In the PRDs and the epics and the user stories and the
Hmm.
acceptance criteria that's associated there. And how much are they thinking about that? Now, I
Right.
have to tell you that it's rare that I find that practice is fully embraced by product development teams. But it's certainly, I think, important to a high functioning team that's going to deliver value and able to iterate on it. So it's sort of the essence of being agile.
Yeah.
And if that's going to be important to what we're trying to achieve with this company, then I have to assess like what it will take to get that company there. And it might affect their philosophy of how they do things, and it might affect the makeup of the teams that are involved. So there's
Okay.
a last point I'll make about organizational design that is part
Hmm.
of my diligence process and why it matters. So I think we all know about Conway's law, right? So Conway's law suggests that an artifact generated by an organization resembles sort of the communication channels and the structure of that organization. So more simply stated, like teams tend to build software that looks like themselves, right? So
Right.
if you have two teams working independently, they will generally create two things that are independent of each other. And so I'm looking for that, the impact of Conway's law, or how Conway's law manifests in the artifacts that an organization is creating. And in some cases, it's like well considered, and it's like, yep, that's exactly what we want, and the organization is well suited to delivering
Right.
that. But in
Right.
other cases, the objective might be to integrate two systems or to bring things together, and yet the organization is structured in such a way that that's not natural, right?
Mm.
And so Conway's law will have an impact on that. So I'm looking for the telltale signs of how Conway's law is affecting the artifacts that are produced, the products that are produced, and whether that needs to change.
Interesting. So let me guess, when you have that singular architect who's the firefighter, that person has hired people very similar to he or she, or to be subservient to that person, and
Could be.
you have a very bad Conway law outcome in that respect. Is that consistent?
It depends.
Okay.
That's a little bit different. So Conway's law would be more directly associated with the team that's actually delivering, like building out whatever that architect might be sort of
Right.
describing, dictating. I
Right.
think there's a different kind of bias you get when you have
Mm.
sort of singular control over architectural vision.
Hmm.
Now you're sort of you're putting a lot of you're betting a lot on that architect getting it right,
Right.
and perhaps you're not leveraging the input and capabilities of other people. So it's kind of a single point of failure, which
Right.
we always try to avoid in anything that we build or any organization that we create.
Right.
So we look for and try to eliminate single points of failure, even during the diligence process. We're sort of have our eye out both in the software architecture and in the organizational structure.
Interesting. And when you're doing more, do you do any consumer product?
For the most part,
B2B?
yeah, for the most part, we're investing in B2B software companies and sometimes those, B2B to C. So it's businesses that are building products and services for other businesses that might serve consumers.
Okay, yeah, because I was going to ask about diversity of the engineering team, ethnically, everything, right? It impacts who they're building for and the demographic.
So
do you look for
diversity is a big word, and
yes,
its impact is profound in ways beyond sort of the superficial way that we sometimes think about diversity.
right?
Diversity isn't just sort of the makeup of the team and where those people came from, but it's like
Right.
what kind of companies they work for, their levels of experience, the industries they've been in, the type of background and education and that sort of thing. So oftentimes, especially with earlier startups, you tend to hire people who kind of look like yourself in some fashion, right? It's like, I hire people who went to this particular school or who have experience from this particular company. And I know, and those are like high achievers or that company has given them great experience. And you might absolutely be right. And maybe it makes sense actually to be sort of very uniform early days because you have to outperform much bigger companies. You have to hit above your weight. And sometimes the most effective way of doing that is having very like-minded people who are working together. However, you are susceptible to change that you won't see coming because that similarity is effectively putting blinders on you, and you don't have sort of the perspective that will allow you to adapt to change. And typically, when we're investing in a company, it's already past that, or PE firms tend not to invest in very early stage startups, and so you're already past that, and and maybe diversity plays even a more important role because you are having to adapt to change, and frankly, you're introducing change. And you need people who are able to sort of adapt, and a diverse set of dimensions, I think, helps.
And what are the biggest changes that happen? So let's go in the first 100 days. You're going to have whole new reporting metrics for some companies that don't have good FP&A. They don't. There's a lot. I've been through these growth stages, and you just let stuff fall through the cracks just to get to where you need to get to, and then you have to. Then you get professional investment capital. You have to be a professional. That's why we call this podcast Growing Pains, because you're growing up. And even a sophisticated venture is going to make some of those demands on you. So what are the most important changes that you see consistently happening for you and for Diversis as a whole? Because there's a whole bunch. There's go-to-market, there's talent, there's everything else in those first 100 days.
Yeah. So one thing that happens is you've started a process during diligence. You've formulated a plan, the beginnings of a plan, but you only have limited access to everything, to the people, to the systems, and that sort of thing. So very early day, like on day one, you have to dive in. So we tend to take kind of a swarm approach where we have operating partners with different functional expertise. And you're just really absorbing and getting your hands on everything. So you have to do a deep level of assessment to confirm or refute what you thought you knew going into this transaction. And the outcome of that, sort of the output of that exercise, is a transformation plan, right? So in the first 100 days, or sort of like before your first board meeting, you have to have a plan of attack. Now, some things may take place on day one or day zero or day minus one, which the leadership of the company that we acquire might not be part of the transaction, right? And certainly across PE, that happens more often than not. Like, it's actually quite rare that the CEO will stay on post-transaction. I think it's about a quarter of the time that maybe that happens.
Wow.
And then, of those that stay on, more than half of the time within the first 2 years, they're replaced. And it's not necessarily because like that person is incompetent. It's just that they might not be what you need to get to the next stage that you need to bring this company to, or they might just not be fully aligned with what you have in mind of doing with this company, because you have taken control over the company, and they might be done. It's like, yep, I
Mhm.
got my exit, and my work here is done. So in that first 100 days, you're sort of assessing and having to put in place a new org structure, oftentimes, right?
Mm.
And then there may be an assessment period where it's like, I want to give this executive a period of time to see how they do, but like I'm going to keep a close watch on this because I can't get into year 2 and to year 3 with any regrets about not
Right.
having leadership in place. So you have to make, like, the biggest thing that you can do is getting the right leadership in place. And typically you wait longer than you should. Like, you never look
Really?
back and say, I was too fast on making that change. It's
Right.
usually
All right.
I probably
The
should
other
have
way
made
around.
6 months earlier. Yeah, exactly. So you need to do the work necessary to inform potential changes in leadership, and you have to feel good about it because these changes don't come without cost.
Mm-hmm.
And so, but there's certainly a cost of
I'm not
not
making them.
action. Yeah.
And okay, when you do those leadership changes, how much? So you mentioned 25% of the CEOs will stay, then
Mm-hmm.
another 50% of those are gone. So really, only about 10 to 12% are
Yeah.
staying post exit. How does that impact the rest of the SLT? And for that matter, if it's leadership of engineering that changes next,
Mhm.
how many of those are loyal to that engineer and want to move on with them?
It could happen, right? So
Yeah.
and it depends on the nature of the company and how it's built, and it's something that you have to keep in mind. So we're always going to be doing sort of talent assessment and identifying who the keepers are that we really have to invest in to keep them, make sure that they're part of the solution and they feel good about that, and
Right.
they're ready to step up and that sort of thing. We might identify some where it's like, well, I don't have enough data to know whether they're part of the solution or not. But I have to make that decision within a quarter or two. So how am I
Right.
going to go about doing that?
Right.
And then if there are others where it's like, well, we need to up level this, or like we're going to change the shape of the organization in a way, and maybe there's efficiencies to be gained in doing that. Then you have, in that first 100 days, you have to have your plan of what changes you're going to make, and you don't want to do these changes sort of onesie twosie over the course of a year. Better to sort of have a strong plan of what you want the organization to look like, and kind of do it all at once. Sort of take the hit, but also get the full benefit of putting in place the organization that you think you need.
I like that. That's sort of the Bill Horowitz line: "If you're gonna eat shit, don't nibble."
Yeah, I try to avoid that metaphor when I'm in the
Yeah.
midst of. Yeah, right. Yeah, yeah. So and you have to come to terms with the fact that you might have 50 or 60% attrition in the first year or two, right? That
Right.
it's like that seems very extreme and detrimental to the success of the company. But
Mm.
it happens. This represents a pretty significant change in the direction of the company and how it goes about its business. If you've invested in a company that's sort of a lifestyle company, meaning like they've been doing just enough to sort of maintain enough profit to keep, happy and that sort of thing. And then along comes an acquirer that has a growth strategy in mind, and so you're going to put the pedal to the metal. And it was like, what? That's not what I signed up for. I don't want, that's too hard, right? And I
Yeah.
don't want a piece of that. And so you want those people to self-select out, or you need to help them out, but like they're not going to help you get to where you need to be. You need to
Right.
attract and retain people with the right mindset, and it's typically a high performance mindset.
Right. Right. Okay. And your MO in terms of company tenure within the portfolio is 3 to 5 years, or you?
Just to say anymore, right?
Yeah. Yeah.
Whether it used to be 5 years was sort of a good rule of thumb of a hold period for a PE firm. The market dictates that, right? And
Right.
so that can certainly be extended, and it's possible that you could achieve your value creation goals earlier than that, and the market is good and there's a good opportunity. But usually we're focused on getting to where we need to be. And, there's all sort of the standard metrics that we look at around EBITDA and Rule of 40, retention metrics and that sort of thing. And there could be other measures that are particular to the company and the situation around the product mix or the markets that they play in and that sort of thing. So that's what you have to focus on, is achieving those.
Right.
The timeline is important though, because it forces a sense of urgency. You have no time to waste. And so that's why that, making the big changes early.
Right.
And sometimes, and sometimes you're going to be underwriting a significant investment to grow, and you want to do that early days, right? You don't want to do that in the out years. So you're going to be really more focused on EBITDA in the out years. So if you're going to be taking a hit and spending a lot, you're going to do that in the first couple of years. So you have to be ready for that.
Right. And let me ask you, I mean, we haven't, I can't do a podcast without mentioning the impact of AI. Are you using any of that in your due diligence process? Have you built an agent to do some due diligence? What's your playbook there?
I have not been replaced by AI yet.
No, of course not you, but because there's all the people interviewing you still have to do.
Yeah, so we do so in some limited ways, but it's not sort of core to our process yet.
Okay.
But because I have a lot of experience applying AI both to business operations and to technology, I see what the potential is, and being able to aggregate knowledge obtained from a variety of sources and being able to interrogate it in a way that gives you meaningful answers is useful, and that's what we're doing. And so leveraging LLMs and leveraging agents to help with that is certainly like the potential. And I imagine that there are other PE firms that are doing that, and there's certainly lots of solutions providers that are building such systems. So
how many agent sellers, wrappers are you seeing a day in your inbox?
I don't know, because I have an agent that weeds them out. So
exactly.
A lot. And, AI is sort of on everybody's mind.
Sure.
It's on the mind of the LPs that are, investing in the funds that we are deploying. Certainly in the minds of the operators, and it's, it has to be in the minds of the companies. And part of that is like, how does that impact your thesis, right? So now, if you're not contemplating leveraging AI or putting AI at the center of your offering, you're probably behind. And so it factors pretty much into every thesis, every acquisition that we make, and certainly into the companies that we already own as part of our portfolio. It's front and center. And obviously it's like table stakes that you're using AI for code assist and for all of these other things, using Copilot or Codium or something like that. You're using Cursor or Windsurf or one of these tools. That's just sort of the assumption now, and obviously it's not always evenly applied, but on us to make sure that we're getting the full value there.
Okay. Yeah, so somebody said, I'll happily get my $450 an hour to rewrite people's meme code.
Yeah, right. Yeah, exactly. Your mind code. Yeah.
Vibe code's right, not meme code.
Code. That's legit, right? How do you sort of turn something that you effectively rapid prototypes using Cursor into something that will scale into a multi-tenant SaaS solution, right? So, but you can't deny the impact that very quickly, without having to write the code directly longhand, being able to prompt up a functional POC, and involve stakeholders and even customers and that sort of thing to shape it. Having something that actually works is profound, and it's sort of a logical progression from having like high fidelity prototypes to now like clickable prototypes that sort of behave, pretend to behave. And now it's like actually the application, right? And because our interaction, sort of our expectations with how we interact with software is changing, with agents, it actually kind of shifts the focus away from presentation and more on interaction.
Right, right. And so let me ask you a business question around that. There's the famous quote from, I think it was from Satya Nadella, who said that SaaS is going to die through agents now because, vertical SaaS anyway.
Yeah.
And how are you seeing that, A, with your portfolio, and B, generally?
Yeah. So provocative statement, which SaaS is a big word. So I don't know if I would apply that broadly, but certainly
Vertical SaaS. I mean, think about
yeah.
it. It's an attributes on a database, and agents
Right,
can go
right.
across databases.
So there's certainly categories of SaaS applications that are sort of workflow built around other systems of record that
Mm-hmm.
lend themselves to like prime for disruption with agentic workflows.
Mm-hmm.
And so if you find yourself investing in or building a system that can be replaced by agentic workflows, you should be looking on how you get into the agentic workflow business and out of the business that you've spent potentially
Right, yeah,
decades building. So
yeah,
so it definitely impacts how we view investment opportunities, and it does impact the role that the systems that our portcos build, how they play in that world. So it used to be the
right,
case like, oh, well, your application has to have an API, right? It has to be connected, programmatically accessible in a larger ecosystem. That's been true for, well over a decade.
mm-hmm.
Now that's not good enough, right? You have to expose capabilities that can be leveraged by an agent that may be working across multiple systems like your own, and you have to be able to plug into that. Or potentially you're building the agents that are leveraging different systems that do specific work. And so it's a different pattern
Yeah,
and model to be thinking about, and other people are thinking about that. So if you're not, then you're
yeah.
probably behind.
Your roadkill. Yeah, yeah. Interesting, interesting. So in the last while, have you changed your thesis as a result of the advances in AI?
I think we've refined it, and basically there's an AI component to not just the criteria that we use when evaluating companies that we might potentially acquire, but thinking about the role that they might play in a largely agentic world. Also, sort of expectations about the velocity of
Mm.
software development.
Development? Yeah.
Right? And so we may, look at a company that has a very large engineering team, and the first thing that we'll think about is like, if we're able to apply AI more significantly, what would this team look like?
Yeah.
And sometimes it's not just like, oh, we can reduce the headcount here, but it may actually change like the people who participate in product development.
Right. 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 Or you just use that engineering team and scale with AI.
You could, yeah. So it also may give you broader capabilities to pursue more things or pursue things faster, for sure.
Right. Well, listen, David, it's been great to talk to you. I appreciate all your insights and for foreboding for what's going to happen and helping our audience understand what you're looking for when you're doing these due diligence processes and perhaps they can shape up in advance of meeting you. You've got a great reputation, both yourself and your organization within the tech community. So congratulations on the portfolio you've built and the rewards you're gaining from it. So thank you very much for joining us today.
Thank you, Sean. Thank you for the opportunity to talk.
All right.